Hi, everyone. Welcome, welcome, welcome. Hi, everyone. Welcome, welcome, welcome. Hi, everyone. So, welcome. I want to make sure
Welcome,
that
welcome.
everybody can hear me. Hi,
And that they
everyone.
can see
So,
the screens.
welcome.
I want to make sure
Welcome,
that
welcome.
everybody can hear me.
Hi,
And that they
everyone.
can see
So,
the screens.
welcome.
I want to make sure
Welcome,
that
welcome.
everybody can hear me.
Hi,
And that they
everyone.
can
So,
see the screens, but
welcome.
I don't
Welcome,
see
welcome.
anybody can hear me.
All right. Hi,
There's
everyone.
some
So,
problem with screens, but
welcome.
I don't
Welcome,
see
welcome.
anybody can hear me.
All right. Hi,
There's
everyone.
some
So,
problem with screens, but
welcome.
I don't see
Welcome,
anybody
welcome.
can hear me.
All right. Hi,
There's
everyone.
some
So,
problem with screens, but
welcome.
I don't see
Welcome,
anybody
welcome.
can hear me.
Something
Happened
Hi,
to the
everyone.
show.
So,
Problem with screens, but
welcome.
I don't see
Welcome,
anyone to hear me.
Something
Happened
Hi,
to the
everyone.
show.
So,
Problem with screens, but
welcome.
I don't see anyone to hear me.
Hi,
Happened to the
everyone.
show.
So,
Problem with screens, but
welcome.
I don't see anyone to. How about that? Bring on. All right, I think we got that cleared up. Yeah, absolutely. I saw what happened right there. Now, what I have to do is figure out how to get my face back on here. I did something kooky with, wait, I know. Hang on. Ta-da! Okay, let's see if that works. Alrighty. Well, we'll see. Um, I'm watching it 5 seconds delayed. Oh, giving me a hard time, Dylan. It is what it is. Okay, so I would love for you guys to see me, but for some reason, me and OBS, we're just no good together. All right, let's see. I can see me in the preview, but I can't see me in the live. So where did I go? Oh, well, that doesn't help me either. But hey, listen, it is what it is. You guys know what I look like. It is 7:48. Ah, there we go. Look at that. Ta-da! Thank you so much for your patience. Let's get started. And I'm going to see, I just clicked the wrong buttons and I go crazy there in OBS. All right, welcome to Market Kickoff. Today is Monday, December the 22nd, where I am. It is 7:48 a.m. and in the Eastern Time Zone, it is 5:49 a.m. and Central 4:49. We'll be starting in just, oh my word. Thank you for holding that one for a review. Okay, so let's have a look at what's going on in the market. We had, over the weekend, we had some seizures of some tankers. We had some fallout from the yen, interest rate going up by 25 basis points, but the yen continuing to fall. That is not good. It suggests that more interest rate hikes are going to be on the horizon, and a lot of Japanese banks are now sitting on some very negative paper returns that they're going to have to unwind. So we could see a very interesting thing move on. A lot of stuff in the backdrop, but what we're going to do is focus on the chart. So we can hope, and we do have things to get sorted out, and we're going to continue to work on them, right? It's our goal. Every single one of us that works on this platform wants it to work well. And so we move on and we get things done as we do them. So one of the big things that I talk about are call walls and put walls. And so I'll first start by reminding us all what call walls are. So call walls and put walls are defined by how option traders position themselves in the market. The option trader doesn't necessarily buy and sell 5 minutes later. What they'll do is position if they've got very big contracts that they want to defend, and they'll collect a premium for selling a call or selling a put. Now, these things sort of sit in a pocket for an entire week. So the lines that are not dotted are the ones that we hold as solid. The dotted lines are the 0 DTE call walls, and those are for options that expire tomorrow at the end of the trading day. That would be Monday's trading day for ordinary traders. That 0 DTE call wall can shift intraday, but how they open up really tells the big picture about what's going on in the market space. Okay? So, know that 0 DTE call walls can move, 0 DTE put walls can move, and so can call walls and put walls, but they generally stay the same place for the entire week unless there's something aggressive going on. So, I want to start with the daily so that we could see what's happening in the broad market space. And what we see is a series of higher lows in the last rotation, and maybe not so much a series of lower highs, almost. To me, this looks like a move that could go a bit higher before it comes back in. So my suspicion is bounces are going to be buy zones, pullbacks are going to be buy zones into the bounce area of resistance for the call wall. So folks are saying, hey, Santa Claus rally, what might we see? Let's go to a 15-minute chart. Markets are going to open in about 7 minutes. I have not looked at where the futures are going to open, but what we did see is a massive amount of buying right into the end of the trading day on Friday. Now, notice on Thursday, we had a very big spike of selling. So let's take a look at the anchored VWAP. And we're going to look at the VWAP from Thursday and now the VWAP from Friday. And those two things are going to tell us how the traders are positioned. This pink anchored VWAP, you're going to see it across all the boards. That is from the FOMC meeting. And so now everybody that was underwater from that FOMC event is now above water in general. The average price action is telling us they've got upward action. So we've got a 0 DT call wall at 6,900. We can see a little bit of resistance there. And so my suspicion is that we try to push into it, pull back, and then make ourselves open for a pretty solid trade. So what do we want to look at? Two lines as we're preparing for the open. Inventory accumulation in this pocket and a breakout area just above. So it's kind of sticky, but let's use this area as inventory accumulation that broke out on Friday, and let's use a Fibonacci. See what it gives us. in terms of range. You can see it goes, there's the 2. That pocket is not too pretty. So maybe we do the wave. What I want to try and find is where the traders are saying to each other, hey, this is support, or hey, this is resistance. And so it is suggesting that the region around 68, 67 is support, and we are trying to break out of resistance into the close of the trading day. Notice they held this area. So we're looking for pullbacks that essentially can hold this pocket between 68.72 and 68.80. Let's be conservative and estimate that 68.72 is where we're going to look for the long there. All right, let's see if we can set up the NQ trade in that quick period of time, and then we'll go ahead and look at it. First, let's take a look at the walls, right? Call wall and the 0DT call wall very close to each other, 25,800. The traders are going to go after that. Things look like buy the dip formations. We are above that anchored VWAP sitting there. I'm going to remove that one. And we are going to go to the 15-minute formations. Oh, notice this. Friday's highest volume 15-minute candle was the first candle of the day, and the traders held that VWAP all day. Very tough trading if you were looking for a breakout. Same thing here on Thursday. Highest volume candle. So if you bought on Thursday at that opening fade, you're very nicely in the green. If you bought on Friday at the opening bounce, you're still in the green. So there are a lot of bullish traders on the horizon. And so what we want to see if inventory begins to build to the upside. Hey, let's just work on the charts. All right, let's focus in and work on the ways that we can set up our formations, use whatever we can to give ourselves an edge. All right, so now we have this. Let's see what the buying pressure looked like. That is a very big candle. Well, how do we want to measure this? I think if I was a guy, I'd rub my beard all the time, is what I'm thinking. Because I do tend to rub my chin a lot when I'm thinking. So, sorry, random. Everybody now imagining me with a beard. So, let's move along. I am not quite certain about how inventory looks here, but I would suspect that coming back into the put wall at 25,500 will give us a bounce zone. All right, so that's what we're staring down. Less than a minute to the open. Let's do a split screen. Well, you know what? It's good to have. It's good to have good self image, and so I think, Tim, that's all right. Okay, so we'll hear the ding 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 in a second, and we'll put ourselves facing what we have. Let's do a split screen, yeah, and let's see if my split screen will allow me to do the ES here. Oh, shucks.
The market is
I don't know how to
open.
fix that. I got to talk to Robert about that. Okay. Here we go. Ding, ding. Yeah? Nice gap up, right? Nice gap up, well over the call wall. So what are we looking for? a gap fill, right? Okay, so we're looking for a gap fill. Let's give it a couple of moments. Let's go over to the NQ. So here's the thing. If you're saying to yourself, I think we're going to have a gap fill, then legitimately you could collapse into, I don't know, 3 minutes. You know the VWAP is all the way down here, right? And if you said, hey, I'm doing
Order
it,
filled.
right? You could simply say, I'm going to give myself a risk threshold of $200 and I'm going to bring it in to the top of the gap because we expect a gap fill. Why? The VWAP is all the way down here. We've got a momentum event really high. So our expectation is, it moves up here with the high literally being the area you would say, all right, I'm out of here, right? Now, if you want to wait for the first 5 minutes, that would also be a good idea, right? And if we take a whoa, all right, so this one is really moving up. Now, semis have had a really good weekend. A really good week, and so they might be pulling themselves into the space, but I do suspect a gap fill is pretty important. Now, let's say you're thinking to yourself, well, all right, let's go back to this measure and see what's going on here. Let's say you're thinking to yourself, wow, I think this is going to be a long. I don't know if it's going to hold. My suspicion would be look for old resistance, new support, and set yourself a limit order right there. Wait for it. Remember, you got to let the market come to you, okay? If you let the market come to you, you're going to do a lot better than chasing the market, right? Just don't chase the market. Let's have a look at Bitcoin. So I do anticipate some sort of lift in Bitcoin, and here's why. The carry trade in the yen is not unwinding. And so because the yen is still falling, even as interest rates rise, the risk of the carry trade giving things trouble is not going to be as extreme. Notice this is the same. This pink VWAP is all of the pink ones are anchored to the last Fed meeting. The call walls and the put walls are exactly the same here in micro Bitcoin. The call wall, 90,000, the put wall, 75,000. So what's happened since last week is that call wall has come in by about $2,000, but the put wall is about the same. And so what they're hoping to have is a little bit of sideways pressure and added liquidity from the Fed, maybe pushing things up into this 94,000 could make a lot of people pretty happy. I think the stablecoin action is muddying up the waters a little bit. I don't know what to make of this, but I will say this. My first thought is that this congestion, we can clearly see buyers at 85,000. Clearly. We can clearly see sellers at 90,000. So if you're looking for a breakaway, and this week could give us a breakaway formation that's pretty substantial. Again, it could be whatever, right? It could be not substantial at all. But if we move in the direction that it looks like everybody's moving in, we'll have ourselves a drift to the upside. We could easily get to 94,000, but once we get up here, there is a lot of inventory to the north. So my first pass would be a short at 90,000 if it gets here, right? Pull it down into that 90,000 area. If it does it, that's great. The buy would be, let's put one here. And again, I'm only going in with onesies. It's not like I'm super confident about this one, right? Much easier for me to see what's going on in the ES here, right? When I have this trade set up and I'm looking for the price action, it's a lot easier for me to go, oh, okay, here's heavy congestion. They broke up above it. VWAPs are well below. I suspect they moved down into it. That's a reasonable estimation about what price action is going to do. Let's take a look at oil. So this one's very interesting. If you listen to my Moneyball report that I do every morning, on Friday I talked about everybody being on one side of the boat in oil and us having a potential shift, right? So everyone is saying, hey, listen, the reason that oil is in backwardation, that just means that it's cheaper in the front of us than right now. The reason that that's like that is because the whole world is awash in oil. That could not be further from the truth. However, that's how they're playing it, and now all of a sudden we've got two tankers getting held up, and now they're after a third. I just saw that like 15 minutes ago. I suspect that this pushes oil up and over these edges. Now, going to be a little tricky. Because the markets are being manipulated, and so we have to be careful about what we're seeing. First of all, old support, new resistance. Traders are going to want to move up here, right? They want to get up and over this edge, but the call wall is here at 56. Both the 0 DTE call wall and the big call wall are at 56. Price pressure from nervousness about geopolitical tension could push this upward, but what's much more likely to push it upward is shorts being caught on the wrong side of the fence. And so, if I were a betting man, I would say to myself, looks like a great buy zone if it can come down and fill the gap. Now, it might not do that. So this oil event might leave me in the dust, but if it comes back, I'll be well positioned for a price action event that's going to hold. So the reason that I would like to buy it here is because the highest volume candle of the day is right there on that anchor point. So I'm going to wait for it. If it comes for me, superb. If it doesn't, oh well. All right, so that's what we're staring down. Upper edges give us 57.67, and let's go to the hourly. You can see this flag pattern building. This 57.67 is the next anchor of resistance if it gets past this one. Yes, it could leave me in the dust, but I'm willing to wait for it. All right, so that is what we are looking at there. Let me pull up my phone. Plug it in. It just went dead watching everyone there. All right, let's go to silver. All right, now most of us trade micro silver if we are trading these accounts because silver trades on 10,000ths of a penny. Last week I said, hey, listen, 64.50, everybody was jammed up against that wall. I said, you know what? I think this is a topping formation for silver. But look at what happened. Here was our $64 price action event. Midweek, so Friday, Thursday, Wednesday, Tuesday, Monday, okay? So at the end of Tuesday, beginning of Wednesday, we had another formation that just exploded higher. And now we're off into a brand new range. So let's measure the wave. Let's use a Fibonacci. To see where we could potentially go next. It seems quite clear that the call wall is on approach, right? This is gapping up. It looks pretty good. If we go down to a 15-minute time frame, I tried to zoom my charts in so we could see the numbers really well, not go blind. But if we look at this price action event, we can see all day Friday, well, not all day, just about from about 11:45 Eastern, the prices began to move pretty sideways. Okay, and so we're looking at this from a sideways patch and saying to ourselves, all right, let's see if we can come back, fill the gap. That would be a halfway spot, right? We fill the gap. That's old resistance. Look at where it opened up and came in right there. 67.45 looks like a breakaway. I would not buy the top of this. That would make me very nervous, especially because it's a silver contract and it's huge. Nothing quite like a silver contract to blow out an account. But we can see the traders trying to hold this area, 67.65, as a new support zone. Really, if we're learning to catch rhythm, remember the first thing that traders will do is try to accumulate inventory that they can either buy or sell, right? That's like you or me. Hey, I want to buy it here so I can sell it there, or I want to sell it here so I can buy it there. That's all that's really happening, okay? So what we have to figure out is, can I find the spaces where everybody's sort of agreeing to buy or agreeing to sell, right? And so that in itself is going to give us a little bit of information. A 1 minute might be very tight for most of us. You could use a 5, right? If we're making higher lows and higher highs and you go, okay, I'm going long, you could buy this, but legitimately your stop is pretty far away if you're using a 5-minute candlestick. I like to use 2 candlesticks to the left, but we also have a gap here. So I would wait. I would wait a little bit on that if it were me. If it were me. All right, let's go to gold. Let's take a look at gold. A lot of us like to trade gold. Let me open up our chat here. And let's take a look at what gold is doing in general. So the put wall for the 0 DTEs has moved up dramatically in gold. It tells us that for the traders that are looking to trade the price action today, they are thinking to themselves, hey, this call wall at 43.40 needs to hold. Notice the pink VWAP. That's telling us, all right, post FOMC, if you're long gold, you're still doing great. Okay? That's upward flow. Support zone, 43.40. Is it worthwhile to position yourself in there? Wait for that? Yeah. You know, I personally would wait just a little bit below that put wall. I'm going to put an order here at the 28 zone, and we'll see if that gives me some good pricing pressure. Why am I being so conservative? Because the broad formation is still fairly sideways. It's still fairly sideways. And the VWAP is sort of meandering. Now, I could be more aggressive and say, listen, I'm going to take it on the VWAP at 43.48. That's also fairly likely. It's also fairly likely. Very nice. Okay, I know some of us are very bullish gold. What I want you to see is the broad price action is telling a little bit of a different story. It's saying, hold the phone. We've got some regions that we need to stabilize in. Now, I will freely admit that I suspected gold to stay in this box below here, and it is not. So what I would like to do is draw a Fibonacci on the wave and see if we are, oh, look at that. Do you see this? Here is the big box of inventory. Now, you'll notice that when you have these big boxes, and small boxes really, if you can find accumulation that sits in a zone for a while and you draw out that box, you can very easily replicate that box using your clone tool and then moving it up or moving it down. And wouldn't you know it, look at the top of the box here. This was Friday's formation, also the highest volume candlestick of several days. So that's a lot of bullish pressure or a lot of buying that could not hold higher. That gives me a little, you know what? That gives me a little bit of a bearish slant on that, because there's a lot of buying, but they did not hold that zone. So let's draw an anchored VWAP right here. And we're sitting around that VWAP, dancing through it. So I'm going to leave that right where it is. Nat gas, right? So very naturally, nat gas is up. Why? Geopolitical risk. Nat gas is going to become much, in my opinion, nat gas is going to become much more geopolitically linked rather than weather linked over the last bit, because last week oil was really falling off a cliff until about Wednesday, and nat gas did the same thing, right? It's been falling off a cliff for weeks, and I believe it's going to start changing temperament. The put wall, for those of us that might remember, it was $3.50 last week. Today, that put wall is $3.75. The call wall is still $5, and that means the traders have a limit at the top, but they are expecting a bottoming formation here. So look for the dips to give you a little bit of buying pressure. All right, let's true. Are you putting your put and call walls manually? Okay, so you can do them manually. Here's the way to do that. Let's go to the ES. I'll teach you how to do it manually. I do not do it manually. I do use a service. I use a service, and that service is Mentor Q, but you can do it without that. So here's what I would recommend, and I will look at the NQ in 2 seconds, Jasmine. So here's what I would recommend. Go to your option chains for the ES or for the SPX, whatever you're into, right? Just go there and look on the call side and see where the biggest number is sitting. There's going to be one area where more contracts are sitting than any other place. On the call side, that will be your call wall. On the put side, it will be your put wall. Now, here's something very interesting. When we take a look at those options and we see the walls, sometimes there'll be two of them and one will say, I don't know, 50,000 and one will say 35,000. Both of them are fairly big. And so what we have to do is say to ourselves, well, wait a second, if that is what is going on, I might need to take a look at that range and be careful, okay? These call walls and put walls are not lines in the sand. They are areas of interest that let us know what other traders might be thinking. You know what I mean? So when you're staring that down, keep that in mind. Keep that in mind for yourself and don't let them be hard and fast lines. You know, I watch traders talk about levels, and listen, there is no better feeling than picking a number and it coming right into the tick and giving you exactly what you want. I am here to tell you that that is the luck of the draw. There are so many of us trading that any one of us can shift price. If you said, hey, I want the high to be the number that we've got right now, 6902. I want that's going to be the high from this moment forward. I could easily put in an order of 6902.25 or 6902.50 and it would fill me. And that would move your number up 2 ticks. And I'm just one ordinary Joe. So realize that one order in a market can move your exact number away by 1 tick or 5 ticks, depending on how big that order is. It could be much more than 5 ticks, and if the market's illiquid. So this is an important thing to realize, that it's zones. We really are drawing these areas with a chubby crayon, like we use in first grade or whatever. I don't know if the cool kids use crayons anymore, but I did when I was a kid. So there we have it. What date do you look at for the option chain? That's a very good idea. That's a very good question. So for the 0 DTE, you just look at the one expiring tomorrow. For the weekly call wall, the big one that we are staring down, you want to look at Friday's expiration. That's what about outstage last week? I don't know what that means, Zach. It is a short week. It's going to be an exciting week. Listen, for those of us that we love the market, or, dare I say we're a little addicted to the market, it's a good time to clear your mind, to make sure that you understand what you're doing, and to say, hey, at the beginning of the year, I wanted to be X, and you had a goal sheet here. It's important to look back and say, did I do what I wanted to, or did I not? And then what could I do that might improve my progress and my process, right? Because this is this is a work of incremental understanding and incremental gains. And so if per happenstance you made, a great trade somewhere and made $1 bazillion, that's a one-off. Doing things consistently, that takes a lot of effort. And so we really want to make sure that we sit back and assess ourselves and say, okay, I did do this, but how can I improve my process? And, how can I help someone else? Because in a very interesting way, when you're able to explain what you do, you learn it better. And when you learn it better, you'll stick to the process better. And many times, all the traders that DM me in the Discord and say, hey, I did this or I did that, at the end of the day, they're not following their process, or they have drift. They go, oh, I used to do this, but I'm kind of doing this. It happens. If you're consistently doing something, sometimes drift does occur if you aren't really focusing on process every single time. All right, someone says, hey, let's look at the NQ. I'm going to do that. Very sideways. So let's talk about this. If you're looking at a trade here, like this, and you're saying to yourself, okay, I'm not really sure what I see, that should be a key point to say, I'm not going to take this trade, right? It should be a key point. If you're thinking to yourself, ooh, I want to trade a breakout because you're very bullish, you could do a buy stop at 25,670, or you could do a buy stop just above the prior wick there, right? Your stop would essentially be the same. Do I want to do that? No, I'm not into doing that for this one. It's very sideways, and I would like to see the gap fill before I take another trade, right? And I wouldn't mind seeing it come into somewhere around old resistance, which is really right around here. This is my sweet spot wishing order. If it comes down into this leg, I'll be in great shape. All right, let's take I get it, folks. I get it. And hi, everyone. I would like to play weekly and 0-day on Fridays. Fast in what FAFO? I don't know what FAFO means. I don't know what that means. I get it. I get it, everybody. I see. All right, let's go back to our ES and see if market information is giving us something that tells us we're off the mark here. Well, we are making lower highs. Not making lower lows, though. That wall appears to be giving us a floor of support. That being said, we still have not broken resistance, and so this trade is still working. Now, some of us have patience issues. We don't like waiting for the trades to work out. Listen, I feel you. I'm the same way. A lot of times what we just have to do is say, all right, I've accepted the risk. It is what it is. I've got price action that I believe is going to hold fairly well, right? And so I'm just going to leave it be. If you're the type of trader that says, no, I am trading a 1 minute or a 2 minute chart, here's what you zoom into. Here's the 1 minute, right? Inventory. Building, building, building. It loses the floor. It loses the floor, and now it's trying to get back up into the area that all that inventory was accumulating. If it does get back up into the area, it's very likely to come back to the top of the range, right? So if you're a trader that is trading a 1 minute chart and you see a price action bounce and it fails to enter that 1 minute open of your chart or the 1 minute close of your chart, you know you've got downward pressure, but it's still telling you, hey, this is sideways inventory accumulation all the way into here. And so the traders are either going to try to get to the top of the box or they're going to collapse somewhere around the middle of the box. Because I expect a downward rotation before an upward rotation, I'm just going to leave it alone. If you're a trader that says, hey, I don't want to do that, I want to take some profit, then this might be a zone where you say, hey, if I breach 69.04, I'm just going to get out of the trade, right? And that, you would pull your price action tool down into there, into that 69.04 area, and then you would say, all right, I'm out if it moves up that far. But to be sure, folks, one of the best ways to figure out what price action is doing is just by staring at price action. Don't worry about other indicators. Don't worry about anything else other than, wait a second, can I see where these traders have been buying and can I see where they've been selling? And realize, just like I mentioned at the beginning, it's a chubby crayon that we're drawing the lines with. And so if you anchor your VWAP to the opening minute and you're thinking to yourself, all right, I think it's got more downside, the recovery of that, which is about halfway up the box, is going to tell you that, hey, they're trying to change the flow of the trade and they're trying to get themselves more bullish. Okay? It's the green line. Thank you so much, Maui. Maui man. Love Maui. It's so beautiful. What was my entry price on the ES? 69.05. The close of the 1 minute candlestick. Oh, gotcha. Thank you so much, Brad. I should know what that means. There wasn't somebody driving a four-wheeler absolutely drunk with 6 people hanging off the back. If that were the case, then I would know what that would mean. I appreciate that, Jennifer. It used to be my charts were very, very messy. I just thought more has got to be better. And here's what I understand about price. Traders with big money, moving a lot of money around, their price action is not arbitrary. It's very controlled. And the reason it's controlled is because a lot of it is run algorithmically, but those algorithms say the same thing. Hey, listen, let it bounce off of this. We'll start buying it up in 2 lots or 5 lots or 50 lots or whatever, depending on what they're trying to accomplish. And they're going to run it through a range. And remember, just like I said when we first started talking, the goal is to accumulate inventory so that you can sell it, right? So you either accumulate inventory on the short end so you can buy it back, or you accumulate inventory on the long end so you can sell it. So what we look at, every single candle formation is simply, oh, somebody's trying to buy or somebody's trying to sell because they want to get rid of it somewhere else, right? They're not thinking short term like you and I might be thinking, where we go, hey, listen, I'm just going for 10 ticks or 8 ticks or 12 ticks or 3 ticks, whatever, right? We're looking for broad motion that gives us an understanding of what they are doing as traders. Make sense? I appreciate that. I appreciate that. One thing I do want to talk about is what bias might do to us when we're staring down price action. So for me, let's go to the NQ because this trade has not triggered. For me, I have a bias that suggests a drift down will give me a buy zone, right? If I anchor the VWAP just like I did in the ES, I'll notice that the NQ is stronger. Now, some traders will say, listen, if the NQ is moving up and the ES is moving down, I don't want to take a trade there because there's a cross current that tells me that the strength of motion is not going to be as good as I want it to be. This is what we're seeing right here. This is essentially what we can speculate on as to why this ES trade is sort of rambling around here. It's either trying to catch up with the NQ or the NQ is trying to catch up with the ES. I have no idea which one it is, but there is a theory that I see a lot of traders say, hey, if these guys are not running together, we're going to have cross currents and choppy action. So I'm just going to wait until they do run together. I don't know when that might be. It might be not today. It might be that they're divergent today. It doesn't really matter in that sort of way. It's just saying, hey, don't trade them if they're not moving in the same direction. That's a personal choice. You can do that. Any special thoughts on trading after triple witching Friday? Is it the bias to the buy side or the sell side? Listen, that is also a fantastic question. And here's the answer. It depends on what the VIX has as its expiration, right? So when the VIX has an expiration that is after the regular quarterly expirations, it's not until after that VIX expires that we see all kinds of potential motion. Right now, the VIX is going to expire in January, and what the traders are seeing is this upward flow generally continuing, but that's not always the case for triple witching. That's not always the case. We do see it in this case simply because we've got end of the year window dressing that should get finished up in the next week or so, and we've got potential Santa Claus rally events which could also flow. Well, thank you very much. See that bounce? Now notice, it's going to pull the ES in its general direction. See? This is what traders talk about when they look at the ES and the NQ and they go, wow, those things are not moving in the same direction, right? And when they're not moving in the same direction, they will say, I'm going to wait until they're moving in the same direction, and then I'm going to trade one or the other, right? What I see here is inventory accumulation all the way through the edge. So my suspicion is that price action should come back and fade. I am sitting in the space, waiting for it, and we'll see what gives. Now, if you're saying to yourself, hey, why don't I buy the NQ if it's moving up over the zone? You absolutely can. You can buy a breakout event. What's important for you to assess is, where's my risk, right? Where's my risk? And so your risk is going to be the top of the accumulation event, which I suspect is somewhere around here, right? So if you're staring that down and you go, no, I want to go long, the top of the accumulation event where all these wicks are and where we saw a breakaway gives the chart a shot at pulling back into that zone. Now you might go, okay, well, it's 600 and, wow, I'm blind as a bat, 658, 671, that's just 3 or 4 points. You could easily say, I can do that. You might give it the VWAP, or you might give it a little bit of extra room. You could also take a short there. And if it comes into this 25,658 and it begins to bounce, then you've got yourself an event that says, no, this short is not going to work, at least not in this particular time frame. That's a pretty good point. Someone says, hey, Prof Fast Guy says, the Santa Rally's been happening all year. I don't think we're getting one after Christmas. That's a pretty reasonable assessment, right? We do have years where the Santa Rally never comes. So it's reasonable to assume, hey, we've been running off the rails, but here's the reason that we're most likely to get a bid into the end of the year. What gives us the bid is how portfolios balance towards the end of the year. On the last day of the trading month, now they're going to try and do that like at around the 24th to the 27th or maybe the 29th. Portfolio managers are going to look at their portfolios, realize quarterly statements go out, and they're going to say, okay, do I have enough NVIDIA? Do I have enough Palantir? Do I have enough of this biotech? Because biotechs are, all the rage right now. Do I have enough XYZ sitting? And so it's going to get them a bid into the market. That's why we see these same rhythms over and over and over again, because the portfolio managers do that every quarter. And so we go, well, we know what they're going to do, so we may as well do that. So also something super interesting, Goldman Sachs put out an article that said, hey, largest ETF inflows from retail traders on record. So this could be a two-edged sword. We do know that retail is getting much smarter about how they move their money around. But by the same token, we normally see these giant stretches out into retail, giving us a little bit of a topping formation. Our job is not to assume, but to say, okay, if I'm having a break to the north, what will I see? And again, if we're staring it down and we're saying, okay, let's see if we got some kind of Santa Claus rally going, what's it going to look like? Well, the number one thing is it's not going to break support. That's going to be the number one thing. So if you said, hey, I don't think we're going to have a Santa Claus rally. The first thing you want to keep an eye out for is, am I holding support? Because if support is not holding, you could very well be right. And so if you're looking at the NQ, you want to go, all right, old resistance should be new support. So if I lose 25,600, guess what? I am sitting on the wrong side of the direction if I'm long in the short term, because it's likely to come back into deeper support edges. One of the other things I like to do is every 5-minute candlestick, I will simply measure, am I making higher lows or higher highs? And I will look for the highest volume candle, and I'll slap an anchored VWAP on it. The second that this anchored VWAP, this opening event here, you can see the image for the volume here at the bottom. The second a larger volume candle takes over, I'm going to add another anchored VWAP to that. And so you can see the traders moving up and over. Again, it's a space where you can say, you know, I'm taking the long. I'm going for it. I've got my anchored VWAP here. I'm going to ride it, let it move up. You set your risk, you set your target, and, you know, Bob's your uncle, right? Thank you, Jay. So nice to see you. That's true. We have had a lot of, this time it's different kinds of events for sure. Clearwater Karma. Oh, what a cool name. Since you look at the put and call walls, do you pay attention to the market makers' gamma positioning, positive, negative? Yes. So I like to know when net gamma is negative and when net gamma is positive. Because when net gamma is negative, I'm going to look for ceilings to show up and supports to fail. They might not, but I will look for them anyway. Same sort of thing if gamma flow is positive, I will look for ceilings to break and floors to hold. That's the only thing I look at when it comes to negative and positive gamma. I'm a bit of a caveman when it comes to option trading. I look at two things. I look at implied volatility and I look at volume. And those two things give me an understanding of my risk and relative positioning. So I'm just, I'm a simpleton because I like it that way. And it helps me make decisions quite a bit more rigorously because there are only a few things I look at and those things have to line up. I would probably go insane if I had, a ton of different things I looked at and said, oh, this, and this. I can't do it. That's why my charts are, essentially some lines and an anchored VWAP or two floating around. Okay, anybody have any other questions? Let's see what silver has done. Holding. Let's see what gold has done. Oopsie. Ooh, big break. Wow, look at that. Big flows. Let's see where the line in the sand is. All right, so 4,400. Wow. Yeah, this is geopolitical. Methinks this is geopolitical. So we might see a little bit of front running from that space. Looks good though. And then let's take a look at nat gas. Yeah, also holding up fairly well. And finally, let's take a look at oil. Yeah. Okay, well, I've got a couple of positions in play. You saw them. I'm going to let them run. Oh, platinum. Platinum's also up. Man, listen, that has been insane. Take a look at this chart. You want to talk about something that's running off the rails? Look at the daily chart of platinum. My goodness, is all I have to say about that one. Let's draw a couple of Fibonacci's, see what we've got. Up at the 2. So let's do it again for this tighter formation here. Notice old resistance, new support. See, old resistance, new support. A lot of motion up here. Wow, that's absolutely incredible. Absolutely incredible. Not a super liquid market to trade at this time of night, but definitely on the run, you know. And what's very interesting is if this yen business still continues, we should see a little bit more price action behavior to the upside as everybody sort of goes back into the metals. We are beginning a very extended commodity super cycle. So I think we're going to see all kinds of physical assets really start catching a bid, and that includes our dear buddy oil. Right? Just a matter of time. Okay, everybody. Hey, listen, that's it for me. Yeah, very, very nice. Do I buy futures options? Once in a hot minute, but not very often. All right, take care, everyone. You know we've got Dakota on tap shortly, and I hope everybody has a good night. Listen, be careful, manage your risk, and as long as you do that, just focus on your process, okay? Processes can be refined, can be improved. Just, pay attention. All right, take care, everyone. See you.